Hey everybody, Sam Evans here with you. Welcome to Take Stock Live. I hope you're doing well and happy. I hope the week's been treating you well so far. Today's date, November the 5th, 2020, or if you're joining us from the UK, it's fireworks night. I've not had fireworks night. If you're joining us from outside of the USA, you're thinking to yourself, what is fireworks night? Long story. Let's not go into guys and effigies and all that, but it's a celebration time. It's an awesome opportunity for fireworks and fun and festivities and roasted chestnuts, and all that good stuff as well. But more importantly than that as well, it is just, what is it? A couple of days after the presidential election. And still, as of writing right now, it's just gone noon here on the East Coast. And we still don't have a result. It looks like Biden is obviously just at the tip of the post right now, almost there. And that's going to be one of the subjects we talk about today. Not who's going to get to power, but more about how does that affect the financial markets as well. I'll be joining my esteemed colleague, Daniel Bustamante, shortly on here. I'll be bringing him into the mix as well. And we're going to be discussing that with you for the next 35 minutes as well. We're also going to just go on the fly here. We're going to talk about your call, my put as well. If you've just joined us, this is Facebook Live. This is Take Stock Live, brought to you by stockability.com. Your questions are coming in as well. I can see as everybody comes on who's viewing, please feel free to type your questions in. And if you don't get to watch the whole show live, remember you can see this streaming on our YouTube channel, or you can catch the recording here on Facebook as well at any other time. So market's up strong right now, looking at play at the moment. 272 points up on the NASDAQ futures, massive day. Got through the huge psychological level of 12,000 points. Looking at these charts right now as we speak on here, on my second screen that I'm seeing over here on the right hand side on here, S&P broke the crucial point of 3,500, up 70 handles today. Dow Jones stonking along over 500 points up for the day at 28,251 at time of writing, and the Russell 2000 as well, futures at 44 points on the upside. Gold, massive day on gold. 50 points, $50 up on gold today as well. Huge day in that market. On the converse of this, crude oil kind of flat, not a lot going on at that particular point. Massive money flowing into gold. Would love to talk a little bit about that as well with Dan and see what does that say about where we're at? What does that say about people's opinion on the economy and so on? Lots of movement happening. Great day for the stock market. We love it. It's pretty fantastic as well. It seems no matter who gets voted at the moment, this market is feeling pretty bullish and feeling good about whatever's going to happen on here. Major news, obviously, 4-day rally that we've seen going into this election week. That is continuing. I think it's going to be great to see what happens tomorrow on this. I've tended to sit on the fences a little bit this week, not doing quite as much. You know, any news result that comes out could cause volatility, and we're going to get to that as well. What else are people looking at right now? Obviously, it seems that the Democrats are hopeful here. Votes counting favors Biden, but doesn't completely end Trump's hopes. That keystone state, Pennsylvania, which I am here right now, already legislation coming from the Trump administration about counting of votes and so on as well. It could be huge, a big swing there. He's not quite out of the race yet, but it is getting pretty close at the moment. Again, all eyes on those ballots when those results come in. US COVID-19 cases surging above $100,000 daily for the first time that we're seeing on here. It's a steep and steady decline, uptick at the moment, unfortunately, that we're seeing. The Bank of England has expanded monetary stimulus as Britain goes into a second lockdown. Prime Minister Boris Johnson announced at 4 p.m. On Saturday just gone that we are in a new state of lockdown in the UK as well, with only vital forms of transport, vital forms of traveling, going to the workplace, getting groceries and food allowed, social gatherings down at a minimum as well. Europe is still on the watch list too. It seems like this thing is nowhere near slowing down. However, AstraZeneca expects trial data for its coronavirus vaccine candidate by the year's end as well. I'm hearing a lot of these pharmaceutical companies right now all saying that they're very close. I think 2021 is probably going to be an even more interesting year than 2020 in this respect as well. So it doesn't seem to be deterring the market. Not a lot happening in that respect. It's business as normal when it comes to it, no matter what happens with the pandemic, no matter who gets the power. What I'd love to do, however, now is bring in the main man himself on here, ask him to start the video, making my co-host on here, Daniel Bustamante. Dan, how are you, my friend? I hope you're doing well. What's been going on? How are you finding this? And Mike, can I just say before you begin, you look dapper. Did you do something different with your hair?
Yeah, I'm using new gel, I think. Just
It looks good. I mean,
yeah.
I like it. I mean, you got a fine head of hair on there, Dan. It's nice to see what you're doing.
So, somebody last night at dinner said that I'm the Latin Brett Baer.
I like it. I mean, you're looking
So,
good, looking a lot better than last week. More about how you're feeling, because I mean, you had that little scare last week, didn't you?
yeah, so I thought I had COVID. I was like really sick. So I'm in Phoenix. So if those of you guys don't know, so last week it was like 65 and it like hit. So I was playing golf late and thinking I was like, I'll be fine. And I was in a shirt. So I caught a cold and now we're back to like 85, 90. So yeah, it's been, I just had to take a second COVID test yesterday because I'm leaving to Puerto Rico this weekend. Yeah.
Giovanni's just saying here, looking sharp, my man. And that's coming from an actor himself, our Hollywood-based friend, student of ours, Giovanni, as well. He loves it as well. So more importantly, you are feeling better. The
Yeah.
markets are
Yeah.
clearly feeling good, Dan. I mean, what do you make of this? We're up 495 points as of speaking right now on the Dow futures, 270 points higher on the Nasdaq. What do you make of it? Do you think this is because let's face it, I mean, you live in a key state as well. Biden got the vote in Arizona. Do you think this is the market factoring this in, that they're excited about, a Democratic president coming in, or Trump? How are you seeing this, Dan? And then we'll talk about the charts.
So honestly, I think maybe I was wrong on this. I did question it quite a bit. I thought with a Biden win that you'd have the market selling off, just because some of the tax policies that were discussed. I don't understand this rally at all. But I don't know. Maybe 2020 is a year where it just doesn't care. So I definitely, I came into the election kind of like you, where I didn't want to be long like risk, like equity risk. So I was like long some UNG, and I had some like 20, 30 Delta put options on a few names that were like honestly like really small. I came in with no expectations. So I don't know. It's interesting. So yeah.
Javier Joe just looking at us from the UK right now. Javier, good to see you on here. I hope you're all right, Annie. She's saying greetings from the UK. Student of mine from the UK as well. Type in the box. I'd love to see how the UK is taking to everything that's going on here in the presidential election race. Cindy, you said, that you had that prediction that maybe we would see a sell-off in the market if Biden got into it as well. I took a different stance, and this is the greatest thing about it, Dan. We can entertain, we can talk about it. At the end of the day, it's the market's opinion that counts the most. I always felt that no matter what the result was going to be, we were going to get some kind of a push. I still deep down think, regardless of whether it's a Biden win, it's a Trump win, this economy's got bigger problems globally and worldwide, way bigger problems globally and worldwide on here than who's in power in the US. Wouldn't you say, Dan?
Yeah. So, the last hedge fund I worked with, I still partner with them, and we share office space on some of our deals. But the main partner, who's kind of like one of my mentors when I was younger, we had a discussion yesterday, like about 3 or 4 in the evening. And we were talking about, I was looking at houses. He's like, you should wait. And I was like, yeah, I should wait. And he was talking about commercial real estate and the delinquencies that we're facing. And he goes, that's just going to trickle off into everything else. So the restaurants, clotheries, like a lot of commercial real estate's in trouble. So I definitely, there's issues there, but I don't understand the market's lack of reaction to it. And maybe that's Fed stimulus in the markets. It's hard to say, but I definitely think there's some underlying issues. I mean, didn't England just shut down again last weekend?
They did, and we've had it again now. So they were on a partial lockdown, as I was saying just at the start of the show.
Yeah,
so
yeah, I thought
we've
so.
got to think now that they're shutting the pubs, they're shutting the restaurants. It's only
Yeah,
curbside takeout on here.
yeah,
I'm torn. I mean, look, this is our show. We're here. We're not here to offend. We're not here to, right the world's wrongs. But opinion is we live in a society where people can say what they need to say. I don't feel that extensive lockdowns are going to do this economy any good. I get COVID. I get the problems. I get that we need to be careful. Heck, I have a 3-year-old son. He's my priority. But this economy needs to be open, right? No matter what we look at, no matter who the president is. And I still think that we're not given a chance. And, my biggest fear is that regardless who gets to power, governments worldwide, where it's here in the US, we have to still maintain a level of business because the economy suffers, unemployment goes up, people are broke, there's famine, there's starvation. Then we get into the crime cycle. I mean, Dan,
yeah. Look at New York.
And this exodus, this is the weird thing, which I'd love to get your opinion on, Dan. I know you take a healthy interest in the world of real estate. And while TakeStock Live, Stockability is focused on the financial markets, the two go hand in hand. It's all about understanding, multiple income streams, diverse portfolios. I've always been one to have an interest in real estate myself with a portfolio. We look at places like New York, we look at San Francisco, we look at London, we look at these major cities. We are seeing literally an exodus of people moving out. A good buddy of mine, actually, who's joining the Stockability team, he's in North New Jersey. The real estate in North New Jersey is going through the roof because everyone's flooding out of Manhattan because I don't need to be in the city anymore. I don't need to be in the city. I don't need to do this. What do you think that does? I mean, because now I'm on the fence. I'm like, man, if we see a big sell-off in San Francisco in real estate prices, we see it in Manhattan. I don't know. I'm tempted. It's still Manhattan. It's still San Francisco. I know you're looking at buying real estate right now as well. How are you factoring that into your long-term goals with real estate, Dan?
Okay, so like in Phoenix, and we're so close to Los Angeles and California, a lot of people have moved here because of it. So it's, if you're asking if I think it's going to go lower, I don't think so in Phoenix, but it's definitely a big issue because you saw like what New York residential real estate, from what I read, is at 2013 levels. San Francisco's down. I mean, you're seeing this happen. I was playing golf with somebody who's working with another brand of mine. He just left Los Angeles with his wife. He's 29 and just bought a house here. And I go, why? He's like, well, look, they got tired of paying $3,600 a month. My wife lost her job during COVID. It's like me, he does pretty well, but he's like, look, it's like when it's one income, it's a little different, right? So, yeah, we definitely can't get back into a lockdown situation. And $1,200 doesn't help anybody. Let's just be honest about it. Like, $1,200 is going to do nothing. So we have to stay out of that because there's just going to be more issues. I mean, commercial, like kicking somebody out of a commercial spot's a lot different than kicking somebody out of as a residential spot. The rules are different. So, I don't know that you're going to see evictions in residential, but in the commercial side, you're going to see it. Like the 90-day delinquencies we were talking about yesterday is pretty massive. If that happens, think about the people that are working at those places, right? Yeah. So it's a really big deal. And speaking of that, we have non-farm payrolls tomorrow anyway. So we're going to figure out some data from that. So we'll see. So.
Well, what can, policy-wise, whether Trump scrapes it back in by the skin of his teeth, whether Biden, causes, the upset and, to Trump's camp and comes in and we have a new Democratic president again, is there really anything either of them can do? Is their policy really going to be that different, and the impact on the market?
Look, for sure, the tax policy changes a lot. I mean, it's no joke. So I don't want to divulge too much, but I'm leaving to Puerto Rico. It's been something that's in the works to go look at a few things there because of tax policy stuff. But yeah, I think if he does win, yeah, there's a huge effect. In Arizona, I'll just tell you all of you right now, they passed a new law called Prop 208. So essentially, if he makes over a certain dollar amount, I think it's combined $500,000 or $250,000 a year, it's 3.5% instant tax more. So think about that's an extra. And again, if you look at it, you're like, oh, it's $250,000, but still, it's like that's an extra $7,000 that's gone, right? And a joint household, it's another 3% off. That's $500,000, right? You already have inflation, right? Massive inflation because of the money printing. You add a tax to it, so it's like, is it really a big deal? Yeah, it's a huge deal. So it's their policy does make a difference. I just think you have to be creative in how you find solutions to it. So.
And you talk about inflation. People don't talk about it enough. Like it's this is one of the strangest economies that we've ever seen. Let's just pull up the charts and just take a look at this on here. I mean, look, who's having an amazing day? Let's just bring up the S&P here. I'm going to go ahead and I'm going to screen share so we can all see this with, just the charts going on at the same time here. I mean, let's just pull this out on a monthly chart and let's just take a look, at this S&P and how it's been performing, Dan. I mean, it has been non-stop now since 2009. Okay. We have had, an incredible rise in the market. We have seen, an incredible push to the upside, in this. I mean, let's just face it, it has been just relentless one-way street to the upside on this market. That's all we've seen. We've got a market that was down in 2009. Here we are, about 660 points, I believe it was. We bottomed that out at. Here we go, just lower than the 800. And now here's where we are at 3,500. Dan, a sign of a good, strong economy is reflective in the market. But what we're seeing, and you mentioned inflation, is this strange situation where I feel like we're in a financial experiment. Here we are in a world where the market's getting stronger and stronger and stronger and stronger and stronger, and the economy apparently is doing okay. Inflation isn't a problem, but if you look at any historical studies, inflation always goes hand in hand with a rising economy. Remember, inflation is the cost of goods going up, cost of homes, cars, all these things. Yet here we are, people are still spending spending money, demand is being created to push prices up. But what's the only way we can combat inflation? The only way we can combat inflation is to lower interest rates, and interest rates are already on their knees. So we're seeing this cost of living going up, but there's no way to suppress that level of inflation. It's a strange market. It's a strange conundrum. Technically, fundamentally, markets shouldn't be moving in this same direction, with a steady level of inflation. It's mathematically, fundamentally, economically impossible. And then when I hear increasing taxation upon people, literally the minute, straight 3% out the pocket.
Yeah.
How do people live, Dan? I mean, I guess that's the question here. How do people live, in an environment like this? I mean, it comes down to me just having others tools up your belt, tools up your sleeve.
Yeah, well, there's obviously that, right? There's other solutions to fix that, but then again, think about it from this perspective. If you lose out on a certain tax, well, your discretionary spending decreases as well. So maybe that goes to a charity, or maybe it's eating out instead of 3 weeks a night, it's 1 week a night. So these effects are real, which is honestly, this year's been a really weird year for the markets. It looks like Biden's going to win. I don't understand the market rally right now. It just doesn't make any sense to me, considering some of the policy that's been discussed by his camp. So it's just, it's interesting. I don't, maybe you have an insight to it. I can't figure it out.
Dan, I'm still cautious. I'm not gonna lie. Here's your S&P right now. In fact, let's just move this around a little bit so you can see my charts. Let's put this center of screen right now. You guys can see this pretty clearly, at home right now as I'm going through this. But I mean, just look at the indecision. I just look at this, your S&P 500. All we have been in is just one extended range in the market here. I still see why it's great to look at the surge. And this is what everybody gets excited about. Wow, 4-day rally. Wonderful, fantastic. But we've been since August just down, up, down, up. And I always say, here's your S&P 500. This is the single biggest gauge of the market. Okay, whatever everybody wants to say. It's the daddy, it is the measuring stick. I see indecision. Everybody gets caught up in these rallies. I also see confusion here. I see confusion. I don't see any real commitment to the cause on here. And again, it comes back to these things. There's buying opportunities in the market. Like we talked about this last week on the market. The levels that we were at, this was a buy area. Here we are right now. I'd have to be taking profit right now on any positions that I've got because of the level of uncertainty that's in the market right now. They're still there. What I think is the tell for me is this chart. This is the tell for me. What does this really say? Okay, when you start to see a surge, look at the move we've had on gold, literally since the start of this month. We were looking at that all important 1850 area here. We've had about $100 rally in gold this month alone. That to me is an interesting tell. Money's still flying into the gold, Dan. How would you interpret that?
So I think from what I haven't traded Bitcoin in a while, but from what I saw on my morning reports, I think Bitcoin broke 14,000 today.
Let's go take a look on here.
So I think that did happen. So I think you're seeing that flight out of a few risk assets. I definitely think you're looking at S&P as we're sitting here talking. I don't know. End of the day, I might end up getting short this thing. So it doesn't make sense to me that we're trading this high. If he in fact is winning, I don't know if they've called it yet. I don't think they have, but it just doesn't make sense as to why the rally. So
to me, at this time, it's a funny time of the year. I feel like the clearer picture is going to come in January. I mean, there's a big psychological proponent to that as well. I have to just look at it. I have to just see. Here's your S&P and the ETF as well right now. I mean, just no real clarity on here. No. I can't be buying into this market right now. But again, I stress this. We talked about this literally last week on the show. There are opportunities for the people who do have a plan. Let's go to Netflix. If you remember last week, I was bullish on Netflix, okay? Bullish on Netflix. What's Netflix done this week? Look, major moves away from our zone on here. I'm on Facebook there. Let's bring in Netflix. Major moves in Netflix. And again, Netflix just come on here. Again, is it the biggest move in the world? Absolutely not. But I mean, we've seen literally this month alone, Netflix come down $470. Here we are at 510 on here. I see this open gap to the upside. And again, more potential upside. I think there is opportunity there for sure. But it has to be, again, while we go through this, and the big question we've been getting here is, how do I handle this market? My response is be diverse, look at other market opportunities out there, have a plan, and try not to think of everything long term. Dan, I'd love to get your comments on this. I feel like looking at things on a, let's say, long-term basis right now is a very dangerous thing. Looking real long term. I mean, what's the longest term outlook you've got right now, man?
90 days.
Yeah.
Yeah, I mean, I think long. It's just too. I talked about this in our GTS. We had our guided trade sessions we do. I think 2 days ago, I was before the election. I talked about, yeah, I hope things sell off so I can start buying like leap options on like Apple and Tesla and a few other select names, like Boeing especially, because I want like a market pullback to do that. So it's hard. It's hard to put any sustainable or real capital to work past like 2-3 days. So right now, what's working? Well, futures are working really well. It was an amazing week. The volatility there in S&P minis, NASDAQ has been great. Short-term options, yeah, so. Really, the futures are kind of where I've been playing this week. But yeah, it's hard to find like, because look, if Biden wins, there's policy change. There's no question there's policy change, and that will adjust equity prices and asset prices in the market. So we have to be careful for that. I wanted to get long bonds into the election. I did not get long bonds. I'm kind of waiting on that too. So yeah, it's just uncertainty. And even if Trump somehow pulls off a win, it's hard to see. It's hard to see the rally at this point, to be honest. It's just I can't be long at these highs, especially look, as a futures trader, and you know this, when you get this type of rally on the S&Ps like this in the past 2 days, like right now we're selling off. Like if we break 80s on this thing, you got to be short. I'm going to be short this. Like you have to look at that fade. So yeah, it's to answer the question, past 90 days is too tough to look. So.
You mentioned Bitcoin, Dan. I'm going to pull up a chart of Bitcoin on that. Is that an investment still crypto? How does that factor into this? I mean, we've talked about inflation. We're talking about now the post-election scenario. Let's face it, Trump, Biden, whoever gets in, no one can really do anything to stem the tide of what's to come. This crazy economy we live in. What are your feelings? I know when we first got to meet, you had a good little run on Bitcoin early in days, and then you stepped off that train. Have you stepped back on it? What do you feel about it? I'm going to pull a chart up, and I'd love to discuss that because we get questions about it all the time.
So look, I'm really weird in that I believe in hard assets like property. Mainly property. Like I believe in hard assets. Anything that's like paper, I can't feel and touch. I just don't trust any of it. So I did trade it in 2016, 17 when Jamie Dimon came out and was like, oh, Bitcoin's whatever. He's kind of talking. I bought a lot of it, did decently well on it, got rid of it. Do I have any Bitcoin now? A little bit, but it's nothing significant. I don't know that I buy into this theory that it's going to 100,000. And I know people buy into it. My mind doesn't work that way. I can't see that. So I only see things as tradable assets. So do I think it's a good hedge? Yeah, for sure. Do I think we see digital currencies heavily used in 4 to 5, 10 years? 100%. So, but is it Bitcoin? Is it other ones? Who knows, right? It's a discussion that, yeah, it's hard to say. So.
Let's get our daily chart of Bitcoin just over the last couple of days. Again, since the start of this month, we're at 13,500, 15.2 right now, back up to some pretty key levels, round number on this. The Bitcoin supporters are going to say, well, there's just your sign. Money's flowing back into Bitcoin again with the level of uncertainty that we're seeing, in the outcome of this. What bothers me is, and I still feel it's an unknown element. We haven't got adequate evidence to suggest that the major banks, the major institutions are really buying into this market the way the retail crowd are. I still see Bitcoin as a retail market. I still see it as a retail environment. And that concerns me. That scares me a little bit. I don't want that. I mean, again, we look back to the highs. I mean, look, let's just go to the monthly chart. We had the major Bitcoin crash. I'm just looking at the Bitcoin real-time index that's provided by the CME on here. Now you can buy the futures. This is my gauge that I use. Look, you'll see just like anything else, price is price. Major lows are created, major areas of wholesale prices. We had a rally up. Could we look at that and say, well, man, at 4,000, that was a great opportunity. But let's face it, 4,000. I mean, $4,000 to one Bitcoin. I mean, it screams to me just, again, uncertainty. When you get certainty in a market, you'll see a trend. I mean, look, going back to your S&P 500, going back to those longer term markets, equity markets have been used as an investment tool over the years, for many years. You see a certainty in a trend on there. Yeah. You have your whipsaws. I'm not seeing that with the likes of Bitcoin. I'm with you, Dan. I'm open to alternative forms of currency. I'm open to, cleaner, more efficient ways of doing it. I mean, let's say this. I mean, to me, You know, the Fed has destroyed the dollar. Every major government has destroyed its currency. It shot all its bullets by lowering interest rate. Fiat currency, since the gold standard was taken out, it's never been a good investment. But this is why I still then look at things like gold to give me a tell, real estate, things that people will always need. And I guess, you know, again, and equity markets themselves as well. I'm a fan of the equity market. Companies are a good investment, I still believe, you know. I just want to find ones with clean books, and that's the challenge, right? Finding ones with clean books, Dan.
Yeah, no, for sure. I think like, so, I mean, I look at equity markets as a way to trade, right? So it's tough for me to buy like anything dividend based anymore, especially look, like I wanted to get back into energy names for dividend plays, but if Biden does win, like you kiss that goodbye. So that's why I kind of ventured off into more like brick and mortar e-commerce assets, right? So again, I just look at everything as return on dollar, return on dollar. So right now, I do think Bitcoin probably takes out those highs. I actually, it's the first time I saw the chart until you pulled it up. I think we're taking out, we take out those highs. I mean, to see that kind of move last night is interesting. That market's woken up. There's a lot of people interested in it. So as far as equity markets go here, heading into this post-election, look, and it's funny because Ophir, who you know is back, he was in Israel for what we were talking this morning. He goes, "You're Mr. Bear," and I was like, "No, I'm Mr. Bear." It's just like it's so hard for me to put money in when you get these massive price moves. I just can't I can't bring myself to do it. So I do want to see these things pull back, and I know I keep saying that, but that's what I'm waiting for.
I'm working with you on a day-to-day basis. I'll agree with Ophir. You are Mr. Bear. I mean, I get it. You know, I get it. I don't like these prices. I don't like where these markets are, but I always remember how and why equity markets were created in the first place. And they were created as a vehicle, you know, to get companies funded. You know, there's a huge business behind it, from mutual funds, huge, you know, financial advisors, the commissions, the fees, the whole structure of how it works. I don't see it going away. I still feel that the equity market, I feel that good company stocks are always going to be a sound investment, you know, when they're there. The movement, but again, let's put this into context. Do we want long-term movement, or do we just want long-term investment, or do we want movement? They're two very different things.
Of course.
Right, they are. I mean, we can go and we can say, hey, you know, we're going to buy and sell puts and calls on the Qs on a day-to-day basis. We haven't got a long-term interest on the QQQ. We're using it as a vehicle to profit and generate, to then take that and move it into something else, you know? So that means for me, when I look at these charts, and again, going back over to this, when I see these charts, you know, of the S&P. QQQ is a great example, actually. Let's go over to the QQQ. Do I want to own the QQQ now at the levels we're at right now? Do I want to own it where we are? I'm in a major sell zone again, where this market is now up here for the third time now in the last couple of months. This is not the time to own it, right? The time to own it is always at the lower prices, right? But again, you know, I can take that and say, but even looking at it right now, even if I'm buying pullbacks to this area here, I see a lot of downside, and I can use the Qs in different ways to still profit. Listen, my attitude is always this. Give me the Qs at, let's say, 160. I want to own it long term. I'm good with that. That is going to be a benchmark. Do I see these markets going down to $20 a share? God, no, probably not. If the price is right, then long-term ownership is on the card. All I need in the meantime is movement. What's interesting to me when I see prices, you know, at these particular highs like this and here, and then I see a $50, where are we at right now? A $47.90 rallying gold as we speak, and I see the surge in Bitcoin. That tells me that there's not 100% faith in this market right now.
Yes.
And
100%.
It needs a pullback. And, you know, if you can buy, and you talk about dividend investing, I'm all for dividends, right? I'm all for that. What a great passive income. You know, whether you're going to buy, you know, preferred stock or common, you know, and you just literally get the preferred, and then, you know, with that, you can just basically get like a fixed dividend on it. Great, you know. But to really get that payout, I need to buy enough of it. And how far is my money really going when I'm paying nearly $300 a share for something, right? We need those pullbacks, you know, and I hate to say it, but it's almost like, Dan, we need another 2008 to get these things to prices where long-term ownership is favorable. And in the meantime, we play the volatility. And there's just...
we got it this, I mean, look, we got it this year on those lows. So that was incredible for a lot of 401ks and portfolios. So when we sold off this year, you had an opportunity to get back in and run it up. So that was there. But I think I think going forward, volatility suppression is going to remain. I don't think we're going to see a lot of these massive volatility events. Now, case in point, the night of this election, volatility was extremely low in S&P. I mean, if you traded 2016, I mean, we had like a 200-point run down S&Ps and a move up. So I came in that night. I'm like, all right, let's get this going. I'm going to make all this money. And it was pretty much like a dud. So I don't know that we're going to see something that crazy. I do think for sure. I was just looking while we were talking at some of the option flow in the queues. I do think for sure that if Biden wins, you're going to see asset prices reset. I think you're going to see, especially some real estate stuff, some REITs. I think you're going to see the overall market pull back a little bit. It has to reset, not instantly because policy change takes time, right? He's not just going to wave it, but I think you're going to see that reprice. So,
and let's face it, taxation, a Democratic government is going to put taxes back up. We're going to see, we've seen in the Trump administration, personal and corporate tax, getting a major break. They're going to inch that back up. That's going to put pressure on the companies. That's going to put pressure on corporate America as well. That's going to factor in. I think there could be. I mean, it's a funny one. This would say that pressure of taxation could then lead to a really good buying opportunity for somebody who knows what they're doing anyway to price it down. Again, this is why we have to be objective.
Yeah.
One more, I couldn't agree with you more. One more tell, if you like, would to be take a look at the treasuries right now. I got to pull off the 10-year notes. I actively watch the US Treasury notes as well. Always been seen as a flight to quality. I mean, look how long that this has been, in an upward trend. Now, for anybody who's not aware of this, when you see kind of price action like this, on the treasuries, okay, let's just take a look at what we have. Consistent upward trend. That means the price of bonds is going up, but that means return or the yield is going down. There's an inverse relationship between this. So as we know, interest rates have been steadily going lower and lower and lower. That's pushing the price of bonds higher. Also, as demand for those bonds comes in, people are still buying those bonds. Look at it through 2019 and through to 2020. Interest rates have kept creeping down, but there's still demand for government bonds. Treasury notes, 10-year notes, seen as one of the most safest guaranteed forms of a fixed income product as well. People are still buying them. There's still an uncertainty about that, in those markets as well. It's still a flight to quality in my book as well. We're seeing it in gold. We're seeing it in Bitcoin, alternative investments. We're seeing it in treasuries. For me, I'm not writing these markets off, Dan, but I think a pullback is still something on the cards. But I'm going to look. Here's the thing, though. I was talking to the students in the GTS room just the other day, Dan, and we were having a chat about it. And I said, while I think this market is overbought, while I also think that this market has probably been, too high, right? Short selling in it aggressively hasn't been the play, and I hate it, but the buys are what. But I've been struggling to get long on it anyway. I mean, it's hard to even get long because we're just not getting the pullbacks that we need, right?
Yeah, a lot of it's just day trades, right? So a lot of the moves, like you can't get like a continuation. It's just like, all right, I'm day trade short, I'm day trade out, which is fine. Look, I wanted to get away from that world 6 years ago, which I kind of did. But now that when the markets aren't trending for more than 2 or 3 days, you kind of want to switch back to it. So that's kind of what I've been doing this week. I switched back to futures. I haven't really traded them too much this year, but I remember, I started as a futures trader. But getting back into, I remember, again, this is a stressful game. It's way more stressful than options is. So
why did you? Then I would love to ask you then, what's made that switch back, Dan? What's
Well, look, we were so busy with stockability, getting the company going. And if you trade futures, anybody who trades futures, you know that when you trade futures, you have to be on your game. And if you're off your game, like you lose a lot of money really quickly. So that's part of it. Now that we kind of have a little more free time. But number two is, I know that we're stuck in these ranges right now, and we're going to get large moves on this kind of wide distribution we're in. So I want to come in and try to make money off that. So, most of what I do is futures trading, and we were just so busy, I kind of took away from it. But yeah, I think with the volatility, you got to stay stuck with futures, especially now, today, tomorrow, because we're going to get a move. When this thing gets decided, like I think you're going to see another 100, 200 point move here. I mean, within a week. I don't think this volatility is done. So I want to capture that. So
and a lot of the emails and the questions that have been coming in lately, Dan, as well. A lot of people have been asking the opinion of you, of me, and the team. I have called me a cautious Charlie, but I've been like sitting on the sidelines a little bit, trying to just take stock, if you like, of the environment, of everything. And I've said to a lot of my students, I'm like, guys, you know what? There's going to be so much opportunity over the coming months. It's not drying up. It's not going anywhere. We just need to be patient. And the short-term moves are out there. On the flip side, I've been doing some options, just very simple call and put buying and just getting into some nice things on that and doing it all. We're kind of having a flip. I'm moving more over to the options. You're getting back into your futures world. It doesn't really matter. What's important is, knowing when to get in, knowing when to get out, and how to handle that as well. I think we could probably both agree here, Dan, that, we're just play the market as we find it, right? Let's, before we move on to our final feature of the day, the message for me is play the market as you find it right now, and wait. I'm waiting for that result. I am just anticipating a spike in this market. I've put my Forex trades on hold. I put everything on hold, taking this as a vacation, watching the show from the sidelines. There's going to be a spike. And what just concerns me is, when you're on the right side of that, that's great. But if you're on the wrong side of it, slippage can kill you. You can get into a real nasty position. Do you think that's good advice, or do you think I'm being too cautious, Dan?
No, look, I question myself this year and even my ability at some point. I'm like, man, do I even have it anymore? Because I've been so cautious for 2-3 months where it's kind of like, should I be jumping into things? Should I be doing more? So yeah, I think that's the best play. I mean, look, I always remember this quote. I try not to quote a lot of traders, but Jim Rogers always said, I remember reading when I was really, really young. He's like, I want to look for ideas. It's like a bag of money sitting in the corner that it's too easy. I can just pick it up, right? It's always the trades you can look at, that's what it is. You can see it and I haven't seen a lot of that recently where I'm like, oh yeah, that's what it is. So yeah, better to sit and wait versus coming out here and, blowing money. I mean, it's not fun to not make money, but it's definitely not fun to lose money. So
that's a great point you make. It isn't fun, and then you have this fear of missing out, that if I'm not trading every day, I'm leaving money on the table. But you could also be trading every day and then leaving money in the market that someone else is taking as well. And any loss that you then make, you have to make that back. It's not like it's just going to appear back in your account as well. That's always been an important thing for me over the years, is how can I, just curb that enthusiasm a little bit, so that I'm not over trading in that respect, and I'm just doing it the right way. So I think Monday will be a good week coming up, potentially next week. I think there'll be opportunity. We'll see how it goes. But I know that when this thing starts, it ain't going to stop soon. So, again, I'm happily sitting on the hand, watching from afar. If something's super obvious, then we'll go for it. Dan, your call, my put. What you got on the menu for this week as well? It's what is there anything? I mean, it's a hard one this week. So, but let's have a little fun with
tough.
it.
Look, I still like this Boeing long. So I like it a little bit more, but I like this Boeing long above 158s.
So Boeing long above 158. All right, let's just go over to the.
And I know that comes off as weird because everybody sees me shorting all the time. But again, I just want to make it clear. I just look at opportunities. So long or short, it's all the same.
Long or short. Let's take a so Boeing long. Let's just take a look on here. I did have this chart up just a little bit before as well. You got to still like it at these prices. We actually talked about this just last week. I remember very, very clearly.
I want to stay long it.
We were talking about this last week, and we were looking at this monthly chart. Let's just go ahead on here, take a little zoom in here. Let's zoom up for our audience right now. And remember, now the monthly candles close, and we were looking at these key areas around this 140. I remember very clearly saying, if this thing holds 140, we were both in agreement. We could see potentially, and what's the numbers on here? Let me just see what we've got. You're at 160 there. I gotta look. I mean, I gotta be saying the 170 mark, basically around the 170s kind of area. If this can hold,
looks good, right?
Yeah, I mean, if I'm a little bit more cautious, maybe 165 to 170 is a nice range on that. I remain the same, 140 as a dead number in the sand, as a line in the sand. If that thing holds bones, got some upside on here.
Yeah,
they do. And again, that's an example of a short term, not crazy short. You're not in and out in a day or so. Maybe plays out for a couple of weeks. But I like the way that's shaping up. I tell you, when I look at it on the daily chart, Dan, I really like it. I would love to see a nice positive close above these highs on here, above previous high of day. But what I'm really seeing is not, again, back to 170. I'm not seeing any major selling pressure. I'm seeing a lot of unfilled gaps on the upside here as well. To me, there's opportunity on that Boeing. And what it's now doing is establishing some nice plateaus on the downside for any pullback potential as well. I think it's in a great location on here. I kind of like it. I see what you're saying. I mean, and again, I look at it from every angle, Dan. I can't really disagree with it. Even on the weekly charts, I want to zoom in, and I'll do something I don't normally do on here. But, you know, one of the things we like to look for, you know, is these imbalance turn points. And you've got this very tiny imbalance point right here that this market on has been just bouncing off of. Again, look back to that number, 140, okay? There's room below it, obviously down to there. But while this floor holds, I see upside on here, back to that 170 once again on here. Couldn't agree with that more. So you took the bull. So you've now, you've took the call. I've got to take the put now, I guess, right?
Yeah, yeah.
I got to take the put. I mean, listen, it's tough. It's tough for me. I mean, you know, these markets and the way that they are. Let's just go over to my watch list and just take a little look and see if there's anything here that really stands out to me. I mean, even in the currencies, I've not been seeing anything that's really, you know, a slam dunk, you know, on here. For me, I mean, the currency markets have just been like chip chop. I mean, literally like just chop meat. I mean, really not so good. Let me just see what this is looking like on here. Yeah, funnily enough, we're getting into the areas right now, but I'm back on this one. I've seen a nice surge in it, but I'm looking at this chart here. I got to say, in the short term, over the next couple of weeks, I'm still feeling a little bit bearish on the Australian dollar versus the Canadian dollar right now. Reasoning behind that, look at this monthly chart. We're still kind of in a situation where there's a lot of weakness in the market. Granted, we have had this surge in the market right now, but we've got a major area coming up around 0.96 again. And this to me is really common. Notice how we've kind of like, you have a little bit of a double tap on here, you know, so we had this first initial like kind of push. So let's just draw this, let's just do this a little bit cleaner for us. We had this first area across here that we hit into, come back. Like to see how we react around this area again, because I'm seeing a ton of wide open downside on here. Also, 96 is a key point. Looking back on this chart that we see, a lot of major price levels on this monthly for us to get through around this. I just see a wall of sellers around that area there. So at the moment, I remain a little bit more bearish on that Australian dollar, Canadian dollar. That's one of the few opportunities I have had. I had a nice little short on it a couple of weeks ago, but now getting ready to. And again, I think the weekly chart tells more. If you look at the weekly chart on here, starting to see that lower low, lower high, lower low, lower high formation gradually drifting down across here. So for me, for a continuation and a move, and again, a lot of wide open space around here, at least maybe down to about 0.9. So it's about 600 pips of movement between the 0.9 and the 0.6. Okay,
so while you're looking at currencies, one of the things I just looked at where you were peeking at it was the yen futures. You know, we were talking earlier in the show, seeing gold rally and see Bitcoin rally. Yeah. Interestingly enough, and I didn't look at this yet, yen's got a really good looking long candle, which is not a good sign for S&P. So when you have S&P higher and the yen moving higher together, something has to give on that. So maybe we see it. Look, I think you're going to see the turn, and we trade back to those election night lows here.
Now you see yen has nothing to stop it. Yen has nothing to stop it. Nothing to stop it. I mean, if you take a look at this, a monthly chart is the tell. You look at this on the monthly chart, you haven't got major monthly areas until we're getting up to around 99 parity on there. You have not got anything on there. There's nothing on that weekly chart. I think we see a good solid close this week, which we've not yet done. These are your established highs for me. You see some good solid closes above these highs, off to the races. And as we know, fundamentally, pressure comes in on the S&P when the market goes to the yen. You can see the same pattern with a very great example of this on the USD JPY, which will be the reverse of this. And again, you know, I've been super bearish with the students on this over the last week. So this was our last trade where we got long-term short at 106.60 in the yellow area. This is our last time we got this, literally looking to run this down. And what I'm seeing on this market is every single time we make a retracement, that market gets weakness, just cannot, it's just hitting lower lows, lower highs, lower lows, lower highs all the way. And all I see, my friend, wide open space, which is the same picture as what we just looked at. We're just looking at the price of the dollar versus the yen rather than the yen against the dollar. So
Yeah.
that would put pressure on those equities markets. Lines up very nicely. Nice little case builder there to be looking at that. That would also, mean again, a weakness on the US dollar potentially on there as well. But to me, the Japanese yen has got a mind of its own in this respect. So I like that. So look, we managed to fulfill it on the currency markets as well. So Friday tomorrow, that we've got coming up on here. Expecting, again, I would expect more of the same, more of the same tomorrow, Dan. Not really much else to kind of talk about on here. Playing things kind of close to our chest, if I say on this, and Monday, do you think cautiously Monday we'll have some news, the better week begins then? What would be your final piece of advice to anybody looking at this right now going, it's movement, what do I do?
So look, I treat all this like a binary event. I think coming into this, trying to guess the direction, it's just straight up gambling. So look, I don't want to make a call. I would rather just wait on the sidelines to see. And I take a look at like a 4-hour, 6-hour chart of S&Ps and NASDAQ and ask yourself, could that come in a little bit? That would be my advice. So.
Awesome. Well, Dan, listen, it's good to see you back to health again, looking dapper and sharp and everything as well. I know we've got classes running again next week. You're going to be a busy man on everything as well. I'm going to let you go. We will connect as well. Stay healthy, stay safe as well. And thank you so much again for joining us on the show, giving us those valuable insights. And we'll be connecting real soon. Enjoy the rest of your weekend. Thank you so much, my friend. Thank you. All right, so guys, thank you. That was Daniel Bustamante of Stockability on there, my co-host on the show. Some great insights from him. Again, I completely agree. We're seeing a lot of kind of indecision on these markets right now. That doesn't mean that there's not opportunity. What that means is we just have to be aware of maybe reduced opportunity. But great comments on here as well. Giovanni, thank you so much for that. He says, no matter who's the president, there will always be a market to trade. That's always good news. And there will be. This isn't going anywhere. And whether the money moves from one place to the next, opportunity is always going to be on the horizon. That doesn't mean that we just recklessly jump in, though. What that means is that we do this the right way as well. Guys, no matter how it works out and everything, thank you for joining us on the show today as well. You can catch the recording of this particular show here on Facebook Live on the Stockability homepage. You can also catch the recording on our YouTube channel page as well. This will be up a little bit later on by the weekend as well. If you feel free, if you need to comment on it, please post your comments right now on the Facebook Live page. We will pick those up. I will also at the end of this broadcast give the summary sheet of how you can come and send emails to us, support@Stockability, if you want to reach out with any of your questions or topics for the show as well. This has been Take Stock Live, powered by Stockability. I'm Sam Evans. Thank you guys for joining us. Thank you also for you guys who went out there and used your right to vote. It's important that everybody does it. Hopefully this time next week, we'll have a little bit more information on where this economy and where this world is going with a new or an existing president back in the driving seat. Guys, this has been a pleasure. This has been Take Stock Live. Thank you so much. Have enjoyed the rest of your week, and we'll see you next time. Thank you so much.